Hey everyone, and welcome to Crypto in a Week. Let's start out by taking a look at the Bitcoin chart to see what happened in the price of the world's largest cryptocurrency this week. As you can see, the week started out with pretty good support at 20K, staying above there, even getting to almost 22K. Until the end of the week when we saw another dip breaking back below 20K once again. And right now, as I record this video, we are still a tiny bit below 20K even right now. So although that is some strong support, especially psychological support, we're still seeing some prices breaking below that. So let's dig into the news and maybe we can figure out why that is. Following problems and accusations about multiple companies and projects, Nexo was also in the news this week as people claimed they were involved in some shady schemes and bad business practices. They released some responses to this in their blog, which is an unusual way to address a problem, but they're claiming all of these accusations are false and providing evidence against them. This is an ongoing news story, but it's another thing to add to the pile of what's to keep an eye on. In some US news, last week Jay Powell testified to Congress about the state of the economy, and following his testimony, US stocks went up, and we also saw this happen this week in crypto near the beginning of the week before we started moving back down again. The reverse side of the story involving the same guy, Jay Powell, is that he recently said the Fed now sees how little they understand about inflation, which seemed to confuse the market and cause a two-day sell-off in stocks, which also hit the crypto space and could be a big part of the reason we're seeing these current drops in the crypto market. Another project taking a hit this week is crypto lender and exchange CoinFLEX, as it needed to cover the losses of a certain high-value customer. And in a controversial approach to this problem, they launched a new token called Recovery Value USD that they're hoping to use to cover the losses of $47 million from a collateralized loan. In order to get people to buy this token, they've promised high returns, but many people are questioning how they're going to pay out those high returns and how secure this actually is. Stablecoins continue to be a hot topic with a lot of negativity surrounding them. Again, probably following the collapse of UST. Some of these stablecoins that have been hit recently are, of course, UST and Magic Internet Money, then Tron's USDD, and most recently, although this is always ongoing, Tether has taken a hit. But Tether still seems to be holding up well. There's just increasing skepticism around the stability of Tether, with a bit of distrust with how collateralized their stablecoin is. However, despite that, it remains the #1 stablecoin and has extremely high volume. Back to the Fed again, SEC Chairman Gary Gensler said in an interview with CNBC that Bitcoin is a commodity. The reason people care about this is if Bitcoin is officially considered a commodity, then it would fall under the regulatory jurisdiction of the Commodity Futures and Trading Commission, which is generally seen as more favorable toward cryptocurrencies, and it might mean the regulations and taxes on Bitcoin aren't so harsh. Also taking a hit from the recent cryptocurrency bear market are Bitcoin miners. Bitcoin mining operations went way up in the past year or two, and now that the price of Bitcoin has dropped, it's hard for them to maintain profits. But of course, something to remember here is that the Bitcoin hash rate automatically adjusts. So if we do lose some miners, then the ones that stay in operation will be able to mine more Bitcoin, and even if it's at a lower price, the higher volume could give them bigger payouts. And perhaps the biggest news story this week is that the SEC once again denied the Grayscale Bitcoin Trust Spot ETF. And Grayscale is following up on their previous promise to challenge the decision if they were once again denied. So Grayscale has built up a powerful legal team, and they're challenging the SEC's decision, claiming that it's biased. So the result of this will be a major thing to keep an eye on, but it's going to take some time, probably 12 months to maybe even 24 months. So this is something to keep on the back burner and see how it develops. And in European regulation news, the EU has agreed on MiCA to crack down on cryptocurrency. MiCA stands for the Markets in Crypto Assets Framework, and it's been talked about for a long time, but now it's been agreed upon and is likely to create much stricter rules on all cryptocurrency projects operating within the EU. In NFT news, Facebook is going to further support NFTs by having a digital collectibles tab on creators' timelines where they can display their NFT work. They plan to roll this out gradually, and eventually they will also have cross-posting with Instagram, which is owned also by parent company Meta. In other NFT news, blockchain accelerator Mousebelt Labs has launched a marketplace called Bored Apes, and their current focus is allowing owners of Bored Apes to rent out the IP use of their Bored Ape to companies who want to use it for whatever purpose, I guess generally promotional. So far, there's already at least 100 Bored Ape owners who have signed up to rent out their Bored Ape, and in general, the idea has been seen favorably as an interesting new concept. It fits in nicely with Yuga Labs' overall innovation of granting full IP rights to the owners of their NFTs. And Mousebet Labs has said that in the future they would like to list other top-tier NFTs for rental, such as Gutter Cats and CryptoPunks. So for today, I'll leave it there. If you enjoyed this video and found it helpful, please remember to like, comment something, subscribe to the channel so that you can see the new one every week, along with a lot of other videos about the crypto space. Anyway, thanks for watching, and I'll see you guys next time.